Welcome back. Is this bullish or is this bearish? This next month or so could change the way markets are forever. And especially as we are in 2026 and we are now seeing moves and potential changes to some of these buy the rumor, sell the news events like this. The crypto bill hearing, also known as the market structure bill or the Clarity Act, where a lot of people thought this was going to be passed in the middle of January, was actually pushed till the end of January. And some other key dates are also kind of lining up towards this same time frame, which may indicate where these markets are going. And is this going to be bullish or bearish? In today's video, we're going to be exploring silver, the metals markets, the crypto markets, these Bitcoin treasury companies. We're also going to be talking about internet computers, Mission 70, which is their mission to reduce inflation this year. And we are going to relate all of this back to where we are in the cycle, where Bitcoin and gold and silver and all of the markets are going. Because like I said at the beginning of this video, the next few weeks in crypto, based on when I'm recording this video, are going to determine the rest of the year and whether this will change markets forever. This is the Cryptoviser podcast. Make sure you guys are subscribed to the channel. We upload every single day to bring you the latest happening in the financial world. Also, do me a favor, give the video a free thumbs up because you guys know thumbs up are free. Crypto is not. Let's get into today's video. This could be bad for the markets. So as we've been talking about, this chart right here is the Bitcoin halving chart, also known as the God chart. It basically tells us where the market is going. And based on this, we are right in line for the decline that we've already seen and for more declines throughout 2026 and potentially into 2027. But then why are we seeing headlines like this? Bitcoin and gold allocations outperform traditional portfolios, backing Ray Dalio's 15% hedge thesis, according to Bitwise. Well, number one, Bitwise is a Bitcoin and crypto company, so of course everything that they find out is going to be basically pro-crypto, right? But in a note to clients, the Bitwise chief investment officer presented research from their senior investment strategist and quantitative research analyst showing a portfolio combining Bitcoin and gold significantly improved risk-adjusted returns compared to traditional allocations. The analysis found that a 15% combined allocation to Bitcoin and gold produced a sharp ratio nearly 3 times higher than the standard 60-40 portfolio over the past decade. Now, this is probably accurate based on this information, but again, we can't really use the previous decade because this is when Bitcoin really began and started out, but it is an indicator of where markets are trending, right? Maybe into these newer type of assets. This is where we see in the crypto space, you know, all the new cryptos that just launched, these do incredibly well from a percentage gain standpoint. But the legacy coins, including the megas like Ethereum, like Solana, like Cardano, like name some others, Litecoin, Stellar. These have not performed as well from a percentage gain standpoint as the new coins that launched within the cycle that we are in. And so there is a lot of indicators that, crypto is going to perform well, but that doesn't mean that we're not going into a bear market. That doesn't mean that we're not going to correct, especially now in January, the beginning of 2026, where most of the market has been bullish on these days. Like, what is the next thing that we're going to pump the market for? Like, that's what they're looking for constantly. It's all the same news, right? I've been telling my viewers for months now that this market structure bill, number one, I don't even really think it matters whether it passes or not. Guys, crypto has clarity. Crypto may not have solidified on the books clarity, from like a legislative standpoint, but most of the crypto exchanges in the US are highly, highly regulated, like more regulated than banks probably, and are overseeing a much tighter, stricter, compliance regulations than banks. So whether they get this market structure bill or not, I mean, guys, if they pass the market structure bill, for instance, and they, ban stablecoin yields, well, then it's better actually to not have this crypto bill pass at all. Right? Coinbase is really one of the biggest lobbyists from the crypto side of the house in Washington. And I would imagine if Coinbase is like, you know what, let's put a kaput to this market structure bill. It's been taking too long. The banks are pushing back too hard. Let's just scrap it. So if they scrap it, Everything in crypto stays exactly the same. Nothing changes, right? You still get your stablecoin yield at Coinbase and many of the other crypto exchanges. But if they pass this, there's a potential that they're not going to even be able to give stablecoin yields to their customers because the banks are fighting that. And so this could actually be worse for crypto than actually better for crypto. That's number one. Number two, everybody was anticipating the January 15th date. I mean, the day before, you can see this was updated on January 13th, right? January 14th, people were still saying on social media, tomorrow's the day, guys. They're going to pass the market structure bill and things are going to change forever. Meanwhile, they totally missed the headline and the news that the crypto bill hearing was pushed to January 27th. And what else is going on around January 27th? But before we go there, Polymarket is showing a 56% chance of the Clarity Act signed into law in 2026. So you can see that this has come down fairly substantially over the last month or so, right? In the beginning of January, we're at 80%. Now, in the mid to end of January, we're at 56%. Honestly, guys, I don't think it's going to pass. And even if it does, is it really going to make that big of a difference for the crypto markets? Like I said, it could actually make things worse for crypto and worse for the crypto exchanges, not actually better. Well, at the end of January, we also have the Federal Reserve meeting, and there is large anticipation, and the sentiment in the market is that the Federal Reserve is going to pause rate cuts, and so there's going to be no rate rise, rate cuts, everything's going to stay exactly the same. And that, generally speaking, is not very bullish for the markets. There's also potential for a government shutdown. Graham Stephan said, meanwhile, we have a 28% chance that there's another government shutdown on January 31st, and that's rising as well. So you have the market structure bill going when they're potentially going to shut down the government, which shows that there's non-agreement to a lot of things within Congress. And so if they're not agreeing to the government shutdown not happening, meaning like they're going to pass the budget, do you think that they're going to pass the market structure bill? And so all of this is happening around the same time, which could be extremely bearish for crypto. And as I've been explaining, since the beginning of January of 2026, based on where January goes, this is going to let us know where the next few months are going to trend. In my view, if January is bullish and we move up throughout January, which we are, okay, Bitcoin is almost at $100,000 when I'm recording this video. By the time you're watching it, it's probably obviously a different price. But when I'm recording this video, Bitcoin is almost at $100,000 again. And so that is the breaking point, right? Are we going higher? Are we going lower? Or are we going to just hang around there? In my view, because all the markets are rallying, and this is going to bring us to silver and gold in just a minute, if all of them are rallying in January, and we have all of these catalysts at the end of January, Federal Reserve not cutting rates, potential government shutdown, bearish, Clarity Act not passing, bearish, Federal Reserve giving comment on this whole back and forth between the administration and the Federal Reserve, bearish. And so if all of those bearish things are occurring at the end of January, that would go within my thesis that January is going to determine the rest of the first quarter and potentially first half of the year. And so we've been going higher and higher in January in pretty much all the markets, in the stock market, silver, gold, crypto. And we have a lot of bearish sentiment at the end of January, a lot of bearish potential catalysts that are potentially going to play out the way that I'm explaining. And by the way, a few days after that, right, February, the first week in February, MicroStrategy is going to be giving their earnings report, which they're expected to report double-digit billion-dollar losses in the end of 2025. And so that's going to be bearish as well. So all of these catalysts together would go within my thesis that if we rally in January, we go down into April, right, from January to April, we go down trending. And if we go down in January, then February through April, we're going to go higher. But that's not what is happening. What is happening is we're going higher in January and everybody's getting super bullish again. And this is what I like to call the typical bear trap, or I should say bull trap, right? Where the bulls are getting locked in to their positions. They're getting more confident in the fact that, oh no, Cryptoviser was wrong. The bear market is not here. The bull market isn't over. The 4-year cycle is dead. What is he talking about? Then none of this is actually true. Well, a bull trap is where the market makes the bulls think that they're correct and they double and triple and quadruple down, which I've been explaining they will do. In the previous cycle, all the major, lending products like Celsius, Voyager, BlockFi, they were all doubling down on their losses. And then they lost even more. And we are trying to double up on our gains, not lose on our doubling down, right? And so that brings us to this. And this is what's happening in the rest of the macro markets, because this is a macro channel. We don't just talk about crypto. We don't just talk about individual stocks. We talk about everything going on in the financial world. This user with 170,000 followers on X said, I can say with high confidence that we're approaching the tipping point. A major sell-off looks increasingly likely, one that should drive the NASDAQ down towards the lower boundary of the broadening pattern around 14,000. God bless and Godspeed. Now, he posted this chart, which shows the NASDAQ Composite Index showing this broadening pattern. And you can see the first wave, we had the up and then the down. Then the second wave, we had the up and then the down. This is the third or fourth, well, this is the third wave, but you guys can see it's the number 4 and 5 going down and then up. And we're now at this broadening range again, right? We can go higher, but the higher we go, the larger and the deeper the correction will be. And this is for any market, crypto, stocks, silver, gold. But you can see as the broadening pattern is continuing, momentum is coming down, relative strength is coming down. And so this could indicate where the market is heading next. And again, this is what a lot of market analysts are believing, that there is going to be a correction. Whether the correction comes now or in 3 months or 6 months or in a year, it's going to come. And by the way, in October, the same user posted these predictions for this year, saying gold would hit $7,000, silver would hit $100. And by the way, a lot of people are anticipating silver to hit 100, and that may be the psychological barrier that brings silver back down to much deeper levels, lower than where we're at. He predicts Bitcoin at 32,500, which a lot of people, especially the bulls in the market, are going to say, are you kidding me? There's no way we're going to go that low. I don't necessarily know that we're not going that low. I mean, we may go lower than that. It's possible. And then here are some other predictions, but iPhone 18 is the same as the iPhone 17. Yep, that's probably going to be correct as well. Maybe they'll have a new color. Anyway, back to gold and silver. This same user said both metals are breaking out. This, in my opinion, he says, is the last stand before equities are mauled. Late 2007 vibes, stay vigilant. And showing the silver futures, gold futures. And yeah, you can see the parabolicness of this move to the upside. Now, silver has moved up throughout the last year, fairly slowly, right? It's been a nice gradual uphill walk, but now it's kind of like the mountains. Now you want to see, kind of a slow upward drift in a pattern on a chart, right? You don't want to see a parabolic move to the upside, because once you see a parabolic move to the upside, it's usually not a good signal. Okay, so let's look at the silver futures, which is SIW right here. And so if we look at the last 1 year, you can see that from the beginning of 2025 until the middle of 2025, it was a slow upward drift, right? From $30 up to about $50 in October. But then we started to see big, massive momentum gains here. And so there is definitely the possibility that we're going to go much, 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 much higher from here. But there's also the possibility that we start to correct, right? Peter Brandt, a well-known futures trader, has said price targeting. I absolutely do not believe in determining price targets with the log scale graphs only on linear scale. The 2x target for silver is $128. Warning, the higher we go now, the longer and the deeper will be the correction. Whatever the high is, it may not be seen for years. And effectively what he's saying here is the same thing that happens in crypto, in stocks, once you get the blow off top, a lot of people end up chasing these tops, right? Bitcoin, $130,000. Everybody's chasing it. Ethereum, $4,000. Everybody's chasing it. But the thing is, once you hit the top, and by the way, it goes into Bitcoin treasury companies as well, or AI companies as well. You know, Iron. Everybody's chasing Iron. They're like, but Cryptoviser, they have deals with Microsoft and Google. I'm like, yeah, but we already know that. It's already priced in. And the buy the rumor, sell the news is over. Like, what else are they going to do that's better than getting Microsoft and Google signed on board with them? What is better than that? Not much. And so everybody's chasing that $80 to $70, $80 high in Iron. Could we get there again? Of course. But is it likely? Probably not. And the same thing goes with silver, right? We don't know where the top is. Maybe we're going to go to $128. Maybe we're going to go to $200. But the point is, whenever we do hit that top is now the barrier that we have to get back to. We have to build the momentum up to get back to it and then above it. And this could take years. This is why we have bear markets and bull markets. I'm not saying that I'm bearish on crypto forever, but where we are in the cycle right now, oh yeah, I'm not bullish, definitely not bullish. And the people who are forever bullish, they're going to be forever bullish no matter what. They'll take a round trip, never take any profits, and stay in an asset that's clearly not performing. And so gold and silver are indicators for where the other markets are going to, how they're going to act as well. These parabolic blow-off tops, that's how they look on the chart. I mean, guys, look at this chart. That's not a parabolic top to you guys, where we've seen hundreds of percent gains on an asset that's never had hundreds of percent gains before. People are going to say, but yeah, but Cryptoviser, this time is different. Maybe. But all those people who've been buying in these warehouses full of silver bars that have done absolutely nothing and not moved in years, you don't think that these silver dealers are selling? They are selling. They are definitely selling. And so seeing, headlines about, gold is taking over and silver is taking over and retail is out the door buying silver. It's like, that's not what's going to drive the prices much, much higher. But this brings us to our other conversation, which is the Bitcoin treasury companies and what they're doing in the market. So we're going to be starting with Arthur Hayes. He posted this saying, 3350 Metaplanet, let's effing go. I stand with Sanai. I don't know who that is. Maybe somebody, one of the executives. But when I first read this, I was like, wait, he's expecting Metaplanet to hit $30,350. But no, that's actually their ticker on the Tokyo Stock Exchange. So Metaplanet is, it's a Bitcoin treasury company. I like following Arthur Hayes' plays in the market and his thesis. I don't necessarily agree with it all the time, but I like following it. Metaplanet is interesting because if you do look at this chart here, the chart looks fairly good, right? But I don't know how this is gonna work in a Bitcoin downtrending environment because the Bitcoin chart does not look like this. Okay, the MicroStrategy chart doesn't look like this. This is specific to Metaplanet, which peaked out essentially when all the other Bitcoin treasury companies popped up. And I think a lot of the reason behind that is because Metaplanet was really the only other Bitcoin treasury company and it was overseas. So it kind of had a different and a broadening audience. But now that there's so many different Bitcoin treasury companies and most of them have come down fairly substantially, I don't know that it's in that same spot that it was in the middle of 2025. But yeah, you can see this chart. I mean, it looks like the bottom was formed already and is turning around. And this is where I say, like, I am not bullish on the market, generally speaking, especially crypto and the Bitcoin treasury companies. But I changed my thesis based on new data and based on what the market is showing us. Because remember, I'm trading the market in front of me, not the market that I want. So although I believe that these Bitcoin treasury companies are going to continue to come down and they're probably not going to perform that well for the most part, Metaplanet is very interesting, especially looking at this chart. This is a 1-year chart. This is the 5-year chart. I mean, this is a parabolic move. I mean, this is effectively what silver is doing. And this happened from April to June of 2025. We went up 400% from April of 2025 to June of 2025. And then we've come down 72% or 75% since then. And potentially formulated a bottom and are reversing out of that bottom. But what's going to happen if Bitcoin drops further from where it is? what's going to happen to Metaplanet. That's where I'm not sure that I'm flipping bullish yet, but I definitely am less bearish on this stock than I was at the beginning of 2026. And that brings us to Strive. Now, we reported just the other day that Strive, one of the Bitcoin treasury companies, also known as ASST, that they just got the approval to merge and basically purchase Semler Scientific. Now, Semler Scientific is another Bitcoin treasury company, and they purchased them basically with all stock deal. Now, the stock on this obviously is down fairly precipitously as well. Even in January, it's come down and then gone back up after the announcement of the merger. But are we really seeing buy demand here, or are we not? Okay, well, I think the CEO of Strive right here, Matt, said, I bought 500,000 shares of Strive yesterday and now have purchased over 1 million shares in the last 30 days. I want maximum exposure to Bitcoin, and I believe that we've built the ideal structure for amplified Bitcoin exposure at Strive. We're the best team in the game, all in. Now, I don't know if he is all in, like his entire portfolio is in Strive, but purchasing over 1 million shares at $1 a pop or less than $1 a pop, I mean, it's less than $1 million in purchases. Is that big of a deal? I mean, in context, it is a big of a deal. Out of context, looking at the macro markets, it's really a small number. It's not that big of a deal. But here's the deal, guys. If we look at Strive, okay, this chart does not look the same as Metaplanet. If I had to choose one to invest in right now, which you're never forced to choose one, right? You could choose neither. You could choose a different stock. You could choose both. But if I were to pick one, I would definitely pick Metaplanet over Strive. Number one, because they're doubling down in an all-stock deal, which is dilution, right? The Semler Scientific shareholders get 20% of the Strive company stock. And so that's a large percentage. Number two, Metaplanet has not changed their model yet, right? They're not acquiring other companies. Strive is doing that. And if we look at the last cycle, if we look at what happened with all these different companies like Voyager, Celsius, BlockFi, Terra Luna, 3 Arrows Capital, and FTX, they were all borrowing and lending to each other. So when one went down, the others tried to save the other ones, and then that went down, and then they tried to save that one, and that went down, and then finally it was BlockFi and FTX tried to buy BlockFi. But supposedly they were a multi-billion-dollar company, and they had no money to buy BlockFi, so they tried to raise money before they collapsed as well. That's what happened in the previous cycle. So seeing these acquisitions of Strive buying Semler instead of just buying more Bitcoin, it's kind of giving same vibes, which is not bullish. It's not bullish. And again, that's where if I was looking at Metaplanet or Strive, I would say Metaplanet is probably, from my opinion, from a market standpoint, is probably more stable than Strive. Short term, we could see Strive do fairly well, but I remind you, just in the last 6 months, it's down from $9 down to under $1. And we had some of the mega bulls buying at $1.45, and then it kept going lower. And again, this is without the Bitcoin price really dropping that much at all. What happens if Bitcoin does go down to these predictions of $32,000? That's 67 or 70% drop from the price that we're at today. And so if we go down 60 to 70% drop from where we are today in the Bitcoin price, what's going to happen to these companies that own all the Bitcoin under loads of debt or dilution or both? That's a good question to ask and to understand as well. And so when we look at other companies like Nakamoto, I mean, just look at Nakamoto versus Strategy, okay? Nakamoto, and by the way, Strategy went from $150 in January, and when I'm recording the video, it's about $190. And a lot of the bulls in MicroStrategy are saying, well, MicroStrategy is going to go much higher now because, of this or because of that, or because Michael Saylor keeps saving money, and whatever the deal is. If we compare, because all of these Bitcoin treasury companies should be moving in tandem with each other and with Bitcoin, but that's not what we're seeing. So if you look at just the last 1 month, you can see that MicroStrategy is up 13%, Kindly is up 33%. Why the disconnect? If I look at the last 5 days, Strategy is up 15%, Kindly is up 10%. Why is that? If we look at the last 6 months, Kindly is down 95% and MicroStrategy is down only 60%. And again, this is some movement in the Bitcoin price, but really not that much movement in the Bitcoin price. Even just from the beginning of 2026, we have Kindly up 23%, but Strategy only up 7 or 8%. So they're not moving in tandem with Bitcoin. They're not really moving with any general purpose. They're just kind of moving. That is also an indicator that there's market disconnects going on. And what are the market disconnects from? I mean, a whole slew of different things. But the point is this bullish or bearish? Well, again, January is going to determine, because the market's going to shake itself out, right? The market's going to recorrelate to where it should be, to the fundamentals, to the net asset values, to what it's in line with, right? I mean, basically all these Bitcoin treasury companies are moving based on the price of Bitcoin, or they should be. And so why do we see a 33% uptrend in the first month of 2026 with Strive, and we see a 23% uptrend in Kindly and only an 8% in MicroStrategy? This doesn't make sense. What is this being based on? In my view, it's all just retail sentiment, right? People are like, oh, well, I'm bullish on Strive because they acquired Semler Scientific. This is bullish. And it's like, is it? I'm bullish on Metaplanet because the chart is looking good right now compared to these other stocks where it may not be. Well, what happens if the Bitcoin price corrects majorly? Well, we're going to have to wait and see what happens there. And that brings us to Mission 70 on the Internet Computer Protocol. Now, we've been talking about ICP for quite a while, especially Mission 70. Now, in the middle of January, they released their white paper. Now, we're not going to go through the entire white paper directly, but I asked Grok's AI to explain Mission 70 and accelerating the internet computer economy. And by the way, I have a whole separate video coming out on this a little bit more in depth. So make sure you guys are subscribed. That way you don't miss that video. It's going to be coming out within a week, or it's already out by the time you're watching this video. So make sure you guys are subscribed, and do me a favor, give the video a free thumbs up down below. But effectively, the white paper authored by Dfinity team, that's the developers behind ICP, released in the middle of January 2026, outlining proposals to revamp the ICP tokenomics under Mission 70. The goal is a 70% reduction in the ICP inflation by the end of the year, achieved by curbing token supply through minting reductions and boosting demand via innovative on-chain applications. Internet Computer is minted for neuron voting rewards in the network nervous system, which is basically the core of Internet Computer's network. And the node provider payments, while burns occur when Internet Computer is converted into cycles, which is the gas for ICP's ecosystem, for compute, storage, and bandwidth. Since Genesis, when ICP started in May of 2021, cycle burns have tripled yearly, but early tokenomics emphasize high rewards for bootstrapping, leading to incomplete burn offsets. Adjustments aim to transition to a mature, sustainable model. So what are they proposing here? Well, key changes to the network nervous system governance, including dissolve delays. This has to do with staking your coins. The rewards adjusted will be proportional to new delays, aiming for an equivalent APY. For an example, 7.7% for 2-year neurons, where the current is 12.3% for 8-year. The bonus structure will shift from linear to convex quadratic for stronger long-term staking incentives. After the 8-year Genesis mark, fix the daily voting reward pool at this level, halting growth and total supply. And then maturity modulation. They're going to replace trend-based system with a level-based approach using deviation from 365-day average, scaled by this, and then using these other formulas. I'm not going to get too deep into that. Then they're talking about node provider reward reforms, focus on efficiency and cost reduction. Effectively, what they're saying here is they're going to slash rewards for Generation 1.1 hardware by 40%, incentivizing migration to cloud engines or exits. If 2/3 exit, rewards could drop 80%. This will shift to monthly payouts for better market predictability. And if I'm reading this right, this would actually incentivize the price to go higher, right? It's the same thing as in Bitcoin, the halving cycle, right? And then they talk about subnets. So beyond supply cuts, the white paper emphasizes growth drivers like on-chain cloud engines. This will allow node provider associations to create customizable, tamper-proof subnets for enterprise workloads, akin to the 1990s internet service providers. Providers will keep the revenue minus 20% for ICP buyback and burn. Supports virtualized and sovereign setups, tapping into the $1 trillion plus cloud market for mass adoption. And then they talk about the Caffeine AI integration, an AI native platform enabling natural language-based app development or the self-writing internet. Combined with vibe coding, it unlocks novel uses like hyper-local social media and massively increases the cycle burning. And so the projected outcomes are this. Supply side changes alone reduce the total minting inflation from 9.72% to 5.4% next year. This is a 44% drop. Reaching Mission 70 is a 70% target to a reduction, right? And that requires a 26% demand surge, elevating burns from 0.05 to 0.77. Feasible given 2025's outperformance via cloud engines and AI paradigms. These represent crypto's first mass market push without speculative incentives. Long term, these adjustments foster sustainability, equal governance, participation, and robust incentives amid growing demand. And so that effectively is what Mission 70 is, to reduce the inflationary aspect of ICP. Now, like I said, we're going to be doing a full breakdown of this in a future video, so make sure you guys are subscribed to that, to this channel. That way you don't miss any of those videos. And by the way, we upload every single day of the year right here on this channel. So make sure you're subscribed, give the video a thumbs up. Let me know what you guys think about all of this that we covered today, from Bitcoin to gold and silver, to all of these catalysts in January, to the Bitcoin treasury companies, and to Peter Brand's prediction that the drop will be longer and deeper the higher we go in silver. I'll see you guys on the next video. As always, thanks for watching.